we are going to understand what audit is actually in this process flow. So this is a reverse, this process flow has been arranged in a reverse chronological order, and I believe it becomes way more friendly, way more easier. What is audit? Can you guys see it properly? Do you guys need me to zoom it? Can anybody confirm in the chat box, please, if it's visible enough, the screen?
No, soon.
Zoom? Okay, right. Is it fine now?
Yup.
Right. Okay, so definition. What is audit? Audit is an independent verification of companies' financial statements. You might get confused as to what audit is, because at times, due to complex jargons, it becomes um, quite tricky and fiddly to understand and comprehend. But let's keep it very simple. Audit means independent verification. Verification of what? The financial statements. The financial statements include everything. They include your company's overall performance throughout the year. Those numbers reflect the company's performance, the operations, their businesses, even the decisions, and the financial position as at the year end. So when we say independent verification, let's make it a way more easier. Let's say check and balance. Somebody said, I purchased a ticket of for Los Angeles, from London to Los Angeles. And now if you have to verify it, you'll ask them, show us the receipt, show me the email confirmation, where did you buy the ticket from? Or show me the copy of the ticket. So what are you doing? You are checking his statement. Okay, you're not going for his word. You are actually asking him to share with you the receipt itself. So that's exactly what audit is all about. Say if I'm the auditor and I go at the client says, I made a revenue of $40 million during the year, right? That's exactly what's there in the financial statements. But am I going to am I going to take his word? Am I going to rely on him? No. Obviously, I'm going to ask him for some evidence, and that evidence could be sales invoices, contracts, sales listing, things like these. Okay. What am I doing? I'm asking him to share with me the evidence, and this process is known as verification, checking, or audit. That's exactly what financial audit is all about. And the objective is very simple. We have to, at the end of the audit, all we need to do is we have to give an opinion based on the procedures, based on our workings, based on everything that we did at the client, based on our checking, based on our verification. Okay. And based on the evidence that we have received, right? Say, if you are traveling at the airport and you have been caught by the customs and they feel that you are carrying some unauthorized or illegal substance within your bags. They take you to an interview room. They ask you a couple of questions, and at the end, they give their decision. They give their opinion. Whenever they give their opinion, they have this. They use the word based on the evidence that we have received from the investigation performed. So, similar to that evidence, we say whenever we, the auditors, express an opinion, that opinion will be based on the evidence that we gather. Okay? And that evidence has to be sufficient and appropriate. Okay? What do you mean by sufficient and appropriate? That's another story. But to keep it simple, sufficient should be in terms sufficient. Say sufficient means the quantity. There should be the evidence should be in good enough quantity. Appropriate means the quality. Say the evidence should be from a third party, not from the client itself. Say the evidence should be in writing and not in a written form. Okay. So, reverse chronological order, I told you what the objective is: to express an audit opinion in the auditor's. Where do you express an opinion? We do it in the auditor's report. What do you need to express this opinion? Sufficient and appropriate audit evidence. Sufficient means the quantity, appropriate means the quality. And the written evidence is good in terms of quality. Directly obtained by the auditor is an appropriate evidence. Obtained from a third party, not from the client itself, not a client generated evidence. Say you're dealing with the cash bank balance of a client, and they give you a copy that this is our bank balance. And on the other hand, you also have an option to contact the bank directly, and the bank will give you the bank statements. So anything that you obtain directly from the bank is appropriate because that's way more reliable. Okay. So is this clear to all of you? Does anybody have any questions so far?